Okay, let me break this down for you. So, the July jobs report drops tomorrow, and everyone's waiting to see if the economy's actually healing or just pretending. But here's the twist, the numbers might look decent on paper, but dig deeper and it's a mess of contradictions. Like, 83,000 new jobs? That's better than June's 57,000, sure. But let's not pretend this is some roaring comeback. We're talking about an economy that's still stuck in first gear. Why does this matter? Because these numbers are shaping everything from your gas prices to whether the Fed hikes interest rates again. And trust me, there's way more drama here than just the headline figures. First off, let's talk about wages. They're barely moving. Yeah, they're up 3.5% year over year, but inflation's still sitting at 3.5%. So, if you're thinking, wait, isn't that just breaking even? Exactly. But even that's misleading. Because inflation's not done playing tricks. Remember when gas was $4 a gallon? It's still way higher than it was 2 years ago. And the Middle East chaos? That's keeping energy prices jittery. So, even if wages tick up a tiny bit, your buying power's still getting crushed. What many people don't realize is that this wage stagnation isn't just a paycheck issue, it's a confidence killer. When people feel poorer, they spend less, which slows the economy. It's a loop that's hard to break. Now, here's a detail I find fascinating, the sectors driving job growth. Healthcare and education are still leading the charge, but leisure and hospitality might bounce back. Wait, why is that a big deal? Because leisure jobs, restaurants, hotels, tourism, are the canary in the coal mine for consumer spending. If that sector's hiring again, it suggests people are finally opening their wallets after 2 years of panic saving. But the June drop was massive, 61,000 jobs lost. Was that just a seasonal fluke? Or is there underlying weakness? I'm leaning toward fluke, but this is where the real story hides. If leisure jobs rebound, it's a sign the consumer isn't dead. Yet. But wait, manufacturing's creeping back. Small gains, sure, but this is the first time since 2023 they've added jobs. What's fueling this? AI investments and companies bringing production back to the US because of tariffs. Wait, tariffs? Oh right, Trump's latest round of tariffs on 60 countries just got sued by half the states. This is wild, right? Tariffs are supposed to protect local industries, but they also jack up costs for everyone. So, are these job gains in manufacturing real, or just a temporary blip caused by artificial policies? That's the question the Fed's probably panicking over. Because if tariffs keep prices high, inflation stays sticky, and then the Fed's stuck between a rock and a rate hike. And here's the real kicker, the Fed's watching this report like a hawk to decide if they'll raise rates in September. But how does that even make sense? If wages aren't keeping up and inflation's still above target, hiking rates would make borrowing more expensive for everyone. Mortgages, credit cards, business loans, all that gets pricier. The Fed's excuse? They're focused on price stability. Translation, they'd rather risk a slowdown than let inflation win. But what if they're wrong? What if this fragile labor market can't handle higher rates? Because not everyone's forecasting a strong report. Vanguard's calling just 18,000 jobs, less than half the consensus. If they're right, the whole rate hike narrative crumbles. But the futures market's already pricing in a 50% chance. That's not confidence, that's a coin flip. Let's zoom out for a second. This report isn't just about jobs. It's about whether the average person's life is getting better or worse. The numbers are a mixed bag, enough to confuse policymakers, enough to spin headlines, but not enough to solve the real problem. Wages versus inflation. Tariffs versus costs. Rate hikes versus growth. Every decision from here is a gamble. So, what's my take? The economy's in a precarious balancing act. One wrong move and everything tips. But hey, that's why we're all watching this report, right? What's your take, optimist, pessimist, or just confused? Let me know in the comments.